I think there's one thing that I want to comment on with credit scores. A lot of the major banks have expectations of 650 or 680 or higher when it comes to insured mortgages. So if you're a first time home buyer or even a subsequent buyer who's looking to purchase and you don't know that there's a whole bunch of lenders outside of the big banks, you might go into your bank branch and be told like, hey, you need to work on your credit. You're under 680. So you can't qualify today, but you can qualify.
Exactly. This was my next question, broker versus banker.
Yeah.
So yeah, continue.
So the difference between working with somebody like a broker like myself or a banker is that as brokers, we're not exclusively tied to just one institution. We can work with multiple big banks, multiple non-banks, multiple alternative lenders, private lenders. So our preference for our clients is always to be with what we call A lenders, which is the cheapest lender out there. Not necessarily just the big banks, because outside of the big banks, there's a whole world. Yeah, they have sister banks. There's these big banks are funding a lot of smaller companies that have the same rules and regulations. They're regulated by the same body.
Lenders, but nobody knows their name. Can you name a few?
MCAP is one. Lendwise is another one. Strive is a new lender that's come in the market that's destroying the competition. That's where we got the 591 approval. So it's a lot of these lenders. They're funded by the banks in some cases, and they have the same regulations. It's almost like, think about a bank giving a commitment letter, and you just remove the TD Bank logo and you put the other logo on there. So same rates in some.
There's a misconception. People think that they have to go with these big 6 banks. And if you go with other banks, it can be harmful for them, or it can be scary, or banks can close, whatnot, right? So we have these small sister banks, which are part of the subsidiary, and they are funding these small banks, and they're still A banks.
Yeah.
They're still A lender banks.
Yeah.
And they have better rates and better qualification criteria and whatnot, right?
Exactly. So in some cases, these banks are actually better. And I think the biggest misconception comes because you don't see their brand or their name out on the street like you would a TD or a BMO, right? And also, people don't understand that we're very heavily regulated. Like financial sector in Canada is very heavily regulated. So we don't actually encounter lending institutions that have predatory practices that are like lending in that type of A space. They have to all abide by the same rules, whether it's TD Bank or it's a Lendwise. And they're all, again, regulated by the same body. So it's the same, if not sometimes better for the client to go with a smaller lender.
And it has happened so many times with our clients. They
Yeah.
went with the smaller A lenders, which give better rates and better mortgage power.
Exactly. And like I've heard comments sometimes like, clients will go to a CABC and CABC will tell them, hey, we don't use child benefit as part of income. Now, if somebody's getting $1,000 a month, that's $12,000 a year. $12,000 times 4.5 is like $40,000 to $50,000 of buying power that CIBC is not going to give, whereas another either big bank or non-traditional A lender will actually be able to provide. And again, that could make the difference between buying or not buying or getting into a better home, right? Yeah. So going back to your question, I think it's the biggest difference between a bank and a broker is having a lot of options for clients. And it's more about understanding what's the client's target price and target purchase price and whatever desire, and then finding the lender that's going to actually help get there rather than looking at the bank policies and just restricting them to that,
I like your analogy that, instead of going to a BMW or a particular dealership, you're only limited to those incentives that are limited to that particular dealership.
Yeah.
You can go to a car dealership where you have all the brands under one roof, and you know all the ins and outs of what's happening, what's new, and what kind of new rates are there, and you can take benefit that way. So I think that's the biggest difference between the broker and the banker.
Yeah. I stole that analogy from another top broker that's a colleague of mine. Okay. But basically, like, what the saying is that BMW, if you're buying a car, BMW, and you go into a BMW dealership, they're not going to tell you that Mercedes has a better deal or that they're having a recall or they're potentially having a recall or issues, right? So they won't talk about their issues and they won't tell you the benefits of a competitor.
Going outside.
And it's not the person at the dealership's fault. They just don't know. They're just trained to talk about their products. Whereas the client could be missing out on deals at a competitor that they should have just like explored a little bit more, and we can help navigate them.